Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, couple of words on the gold market. And gold market is not the exception, it also has turned to some retracement. As technical as the fundamentally, market needs to take some relief to understand what's going on and just to get the pause from the shock that it has got recently. So what we have on the gold market? On the gold market, in general, our suggestion was correct, that market has hit strong resistance area and should show some retracement down. At the same time, this retracement, although it could be deep, it doesn't exclude the chance on the further upward action. But to clearly understand what really the probability that market will show the compounding ABCD upward action to the 1220 area, we will need to take a look at the COT report in the weekend. Right now, we mostly will work on the tactical issues on this downward retracement. As you can see, reason for that retracement is absolutely reasonable. So market has hit significant resistance area. This monthly pivot resistance one, Fib level 1156. It's also daily overbought. And in fact, we have here this bearish stretch pattern that suggests itself the deep retracement. Also, recall what we have said yesterday. Market has strong previous bearish momentum, long-term bearish momentum in the market that also will press on the market and will force it to make deep retracement. Second important moment that we see on the daily chart, take a look at the shape of these candles. Trying to surplus these two candles combined in these two candles. In this case, you will get the two-day bearish engulfing pattern. And we know that the target of the bearish engulfing approximately equals the length of its candles. If you will count it to the downside, you will get the area approximately at the 618 support, 1115 maybe, and the monthly pivot point. It doesn't mean that market will just drop miserably right to this area, but maybe we will get some kind of the ABCD pattern. That right now seems logical, especially because market is right now is approaching to the strong confluence support on the daily chart. It's 1132, 1134 is confluence support. It's really easily could be some kind of the, for example, here, then we will get some kind of the bounce, right? And after that, we will get some kind of this downward continuation. This will be absolutely logical, just how market usually moves. That's why this analysis tells us that we probably should be ready for deeper retracement to the downside, and we should not hurry with taking the long position. On the gold market, it's possible. Mostly on the nature of how market moves right to the confluence. Of course, there exists some chance that market really could bounce up right from this area. But we are working with the probabilities. And recent action suggests existing of the overbought, recent fast action, fast drop down suggests, and existing of the patterns that has target slower suggests that probably market should show the deeper retracement. So that is what we have on the daily chart. On the forward time frame chart, guys, I would like to congratulate those of you who trade the double repo sell here. Market has hit the target, so you can see the 50% support has been hit. But it doesn't mean that market can't continue move lower. This just tells that the double repo pattern has done and market already has completed it by reaching the 50% support area. So you could keep the position further, but you have to manage it. So how you will manage it, that's probably stands up to you. There are multiple possibilities for that. For example, you could take the profit here, or when the market will hit 1130 confluence support, wait for the bounce, then take a position again with a possible downward action. Or you could, for example, take the half of the position here, wait for the bounce to scale in, or tie the stops on the other. On the case of market will occasionally drop lower right to the next destination point. So multiple solutions could be could be done here, but personally I just have closed the position because my context for trading was the double repo has been completed, so as soon as the pattern complete you need to take profit. That's simple. The next destination, logical destination point here on the 4-hour time frame chart probably will be the weekly pivot support one. Market could reach it either after the bounce from the confluence on the daily and turn down, or maybe if it will not respect the confluence, this also could happen. It could move directly to the weekly pivot support, but that will be next important fib support level on the gold market. Still, guys, the chance that market will respect this area looks more probable, because that's just how engulfing patterns forms. You probably know by yourself that when the market forms the engulfing pattern, it usually shows some retracement back inside of the body of the pattern before this pattern will start to work. That's why it's something of that sort I expect to get here on the gold market. Anyway, the major conclusion right now on the gold market is that probability suggests the deep retracement, so don't hurry with the possible upward action, with the taking of the position on upward direction. Wait for the deeper retracement. The scalp traders, probably you could try to use this situation with the possible trading on the bearish side on the market on the intraday charts, but this is then beyond the scope of the current video update, because we will mostly talk on the daily trading, and the daily picture suggests expectation of the deeper retracement and waiting for the better levels for taking the long position.